Hey guys, welcome back to the channel. Montana here, and on today's video I'm going to be talking about pockets of air. Pockets of air is essentially, or it is, a rally or a drop, either one. Now the reason this is crucial for you to know how to read price or how to understand price action is it ties the four formations I've been talking about for the past two videos. Reversal patterns, which are rally-based drops and drop-based rallies, and continuation patterns, which are rally-based rallies and drop-based drops. Notice how all four of those have the word base in them, and all four of those have the words rallies or drops. The rallies and drops tie it all together if you understand what the basing is. The rallies and drops are pockets of air. And the reason that's so important for anyone who's either an active trader or an investor, 401k kind of thing, just a passive investor, is you know when, or it tells you a really good metric on where price is going to run to, how much space price has to run, either with you if you're already in a position, or if you're looking to get into a position, maybe thinking, hey, this isn't the best choice because price is going to continue going. Let's just say if you want to go long, it's going to continue falling for a little bit further, or vice versa. So from both perspectives, really important to know. Another really important thing is knowing that whenever price really moves ballistically in when it moves ballistically away from any kind of area, and you think you missed it, this keeps you from chasing price. Chasing price is whenever price like absolutely rallies, gets on a rocket ship, and you think you have lost that train, like it's already gone without you. And before you know it, you buy high and it comes back down, and you're thinking, oh well, dang it, I got in way too high, and then it's like it comes back down, and then it ends up going your way. Well, why not get in at the low, or if you're shorting, vice versa, get in at the high. Any kind of ballistic movement does not last forever. And from the opposite perspective, if you're looking to get into a position, if you're already in a position, then that might be a pretty good time to cash out maybe after a ballistic move. I mean, if price really took an impulse move to whatever direction, long or short, then that's a pretty good indication where you're going to maximize your profit potential and you don't leave money on the table. So pockets of air, really important. They tie essentially the past two videos I've been putting out, or I have put out. There we go. That's a better way of putting that. So I know a lot of the videos are not the lot. Why am I thinking like it's been so many? It's just these videos take a lot of work. The last two videos I've kind of gone well over 20 minutes, or at least 20 minutes. I'm trying to condense it down into bite-sized pieces of information. The problem is, because trading is so complex and one thing ties to another like so intricately, and it's so difficult to just explain one aspect of it without someone who doesn't know a lot about trading not understanding, because you need to know all these other facets. So I'm trying to not go off into the weeds. I'm going to do my absolute best to keep this one hopefully under 15 minutes to see what happens. And I'm going to do my level best to not shove videos down your throat, but because, like I said, so many aspects are linked so tightly together for you to understand the whole concept of price action, how markets do certain things and why they do certain things, because it's a living organism based on a mechanical function. I'm going to give you pictures of links to videos right when I say it. So if you want to understand, if I say something that you don't understand, at least you have the image to know, hey, that's the video I can go back to. Not doing that to shove videos down your face, just maybe trying to help you out a little bit so you can get a more a more well-rounded approach and understanding as to what I'm saying without you getting lost. So without further ado, let's jump into our perfect world. All right, so we've been over reversal structures, which is a drop, base, rally. That's a reversal to the upside because it was dropping before, and a rally base drop. That's a reversal to the downside because it was rallying before. Notice how both of these have drops and rallies, and both of these have basing. Basing just tells you where supply and demand had an equilibrium. There was a balance. And then depending if price breaks above the basing, then there's an imbalance of demand. Or if price bases and then breaks below the basing right here, that would be the low, then there would be an imbalance of supply, hence why it's a reversal to the downside. Rally-based rally is the continuation structure. That was last video, where you have a rally base and then you wait for either to break above the basing. If it would have broken below, it would have been a reversal, a rally-based drop, but it broke above. So it's a rally-based rally, hence the name continuation pattern. I know, it's really complicated that way. And to the short side or to the downside, which is a drop base drop. Now, all four of these have a rally and a drop. So how do pockets of air, which are the rallies and the drops, tie into all of this? This is where it's fascinating. As I've said before, an impulse move, there is no imbalance of supply and demand here. It's just simply follow through from another area of demand. So whenever you have a impulse move to the upside or downside, it does not matter. That's just price moving. Whenever you have basing, you have given price time. Let's just say that each candle is 5 minutes. Here it took 15 minutes of balance for you to be given, essentially, equilibrium. And then depending on whether price breaks above that equilibrium, that balance of supply and demand, if it breaks above, that means there's an imbalance of demand right here. Because inherently, if there is an imbalance, there had to have been a balance before. That's what basing is. So if you broke above, then that's an imbalance of demand. If you would have broken to the downside, that would have given you a reversal pattern, reversing the movement, or reversing the move up to then go down. Makes perfect sense. So pockets of air are the rallies and the drops because there has not been enough time for you to have that balance and then imbalance. It's just an impulse move. So how does that tie in to actual price movement? Let's say you've been given a drop and then price bases. You're waiting for either price to continue to the downside, which is to break below the basing, giving you a drop-based drop, or to break above the basing, giving you a reversal pattern, meaning price is going to go up. And in this circumstance, it does. Not only does it give you a demand zone, but also breaks above the swing high, and that'll go. And that's if it breaks above the swing high, then that means you're in an uptrend. And I'm going to be covering trends, in the next couple of episodes. But apart from you being in an uptrend, this is a clear area of demand. You had a drop, you had a balance of supply and demand, and then an imbalance of demand, a lot of demand. You had ballistic movement up. Now, because there was not enough time for you to have any kind of basing, which would be a rally base rally, this is just a pocket of air. Pockets of air often give you other pockets of air because there is no zone here that needs to be broken if price falls. And it does. Like I said, pockets of air often give you pockets of air because nothing needs to be broken. Price just falls through thin air. There are no demand zones along the way. And in our perfect world, you get a wonderful reversal pattern, which is a hammer in a demand zone. That's a great odds enhancer. And then follow through. And since we're in an uptrend, obviously it's going to be going higher, higher and higher because we live in a perfect world. But my point is made. Pockets of air don't stop price. Pockets of air are essentially areas where price either falls, completely downward if the original leg was to the upside, or if price fell ballistically to the downside, it's going to rally ballistically that same way. And I'm going to give you a few examples in the next couple minutes. So to cover, ballistic movement out is a pocket of air because there's no zones in it. And because there are no zones that need to be broken, it's a pocket of air, so you fall the exact same way. And then you rally the exact same way because the only small area of supply is at the origin of a large move. This entire space right here, pocket of air. Hence why if you go long here, you'll get at least this high, if not further. But that's more into time frames later whenever I can get into what happens within these 5-minute candles. So let's see what this looks like to the downside. Here you're given a drop, and then you are given basing. You're looking for either a drop base rally like we just saw, or price is going to continue giving you a drop base drop. And it does. This is a supply zone. You have price falling and then you have an equilibrium in supply and demand, and then fell ballistically from that area. Not only, let's just say that you were short here, does that base drop the second it breaks below the low of this basing, tells you to continue and maybe exit a lot lower for profit, but it also is a fantastic supply zone because there is an imbalance of supply to the downside. This leg here is going to give you no resistance because there is no supply here. There was not enough time for any supply to be formed. And a supply or an area of imbalance needs to have basing first, which means time needs to elapse for it to occur. No time for any of that basing to occur here. So price rallies ballistically in, again, giving you a pocket of air because there was no resistance on this leg either. And since this is a continuation pattern, price should continue to the downside. And it does. So large pockets of air or ballistic moves, 90-degree moves, have nothing in them because they happen so fast, because they are ballistic move. They're called ERCs, expanded range candles. They travel a lot of distance in the same amount of time. Let's just say all candles on your chart are 60 minutes. Well, if one candle only travels 25 cents and another one travels $1, well, there was not enough time for price to have based and then rallied and then based and then rallied. It's just going to go up ballistically and there's going to be nothing supporting it. So it's going to be a pocket of air. So large ballistic moves or large impulse moves lead or often give you large retracements, which means price will often come back all the way down or all the way up, depending on the direction of the move, to its pretty much origin or the origin of the move. Let's see what that looks like on a real chart. So here's the example I've been covering for the past 2 videos, which is the GameStop example. And it's fantastic when it comes to understanding not only order flow, but pockets of air and rally-based rallies, which are continuation patterns. This rally-based rally, fantastic area of demand, like we were exactly the same as the drop-based drop that we were covering, that we were covering not a few, but just a second ago. This is to the upside. Rally-based rally, when price re-enters, you're given a continuation to the upside, right? But it's also a pocket of air. Look how your initial move was ballistic and it retraced pretty much, let's just say 95% of the way to the downside, that price covered to the upside. Again, the reason it does this is there's not enough time for any kind of basing or balance then imbalance to support price on the way up. That's an unsustainable go. One, you don't want to catch those. You don't want to chase price going up. Whenever you see price going absolutely rallying and it's on the rocket ship and you're thinking, oh no, I've missed this trade or I've missed this move. Don't worry about it. That's not the move you want to get in. The move you want to get in are the zones that it leaves behind. The zones that are left behind are ones like these. This is why I've said this before, this is the zone right here when price re-entered. This is the trade that professionals took. Whoever got into the position here, amateurs. In fact, it was a bunch of amateurs that created that whole leg and people were buying on the way up. You don't want to buy high, you want to buy low. And you don't want to sell low, you want to sell high. So whenever you're given big legs, if you're already in the position, then don't be afraid to cash out. Cash out high if you're going long and cash out short or cash out low if you're going short. That's exactly what you want to be doing. Buy low, sell high, buy low. Conversely, if you're not in the position, then you don't want to buy high and you don't want to chase price. You want to wait for it to come back down, and it's going to have to because it's a pocket of air. Let's go over a few more examples. Right here, this drop base, massive drop. One, let's just say that you were in this already and that you did happen to catch this small drop base drop here, or that you shorted that drop base drop. Let me do this again. Drop base drop, price re-entered. Let's just say that you did catch or that you did short right there and price fell. Let me maximize this a bit more. Down here, or as you fall, notice that this is just ballistic movement. It's an impulse to the downside. There is no supply zone. There's no drop base, or not even like a swing low, swing high, and then continue. It's just a solid drop. You want to short high and then buy back to cover low. So if you're already in a position, don't be afraid to buy to cover and cash out for profit here. And if you're not in this position, then don't worry about it, because any time that this trend line breaks, and again, I know I haven't gotten to the trend line, so I'm going to keep that to a minimum. But any time that you get a break of that trend line where it breaks right here, then price is going to have to rally, because if it's already going up, there's nothing stopping it until you get to this base drop, this imbalance of supply and demand. And there's an imbalance of supply. So when price re-enters that zone, it falls from it. And notice, because you had a pocket of air, price can rally the exact same way, which is what you want. You want pockets of air, because if you're going counter to the pocket of air, because if there's a pocket of air coming your way, it's coming your way because there was a move that also created, that there's a move away from an area that also did not create any kind of resistance, hence why it's coming into your area that way. And if you're shorting or going along the origin of that large move, that's where you want to be, because that's where imbalance is. Hence why when you get big ballistic move, you get often ballistic moves in, not giving you any kind of resistance, and you get pretty good follow through on the way out. And again, this is where you also don't mind cashing in or cashing out for profit low. And this move will actually, I'm going to stop there. I'm proud of myself. I'm not going to go into the weeds. I'm going to stay on point. We'll be covering that really soon, though. It's just so exciting. Okay, so pocket of air out, pocket of air in, and because there's no resistance, pocket of air back out. That's what you want to be looking at. That's brilliant. To the upside, you have ballistic movement out, the origin, this rally, base, long-term basing rally. That's the origin of a large move, ballistic move. So there must be a lot of demand in this area. Sure enough, when price falls into an area of demand, it should reverse. And this area right here is just a smaller but yet ballistic movement in. This area right here. Let me color that yellow. This drop, ballistic movement. That's unsustainable. So the only thing you have to worry about is the origin of this zone right here. And as we have said before, if you do take this long, which you should have, if you see rally and then basing in an area of supply, that means price is going to continue. So stay in this one. And sure enough, you get continuation to the upside. If you're in a position and then in areas of opposing supply, that's where you get rally base rally if price is going to continue to the upside. If you're shorting, then in areas of opposing demand, that's where you're going to get basing. And the reason that is a continuation pattern is because you're giving price time to eat away at the opposing sell orders that are still in the market right there. And after price breaks above it, then you have another, chances are, pocket of air, which is why you get pretty decent ballistic move out, rally, base, rally, and so on and so forth. But notice how, because you have a pocket of air here, there is no resistance here, which is why price comes back down almost 100% retracement. Pockets of air, zero resistance. Let's go over another example. This drop, base, drop, ballistic movement down, and notice this continuation, like I've just said, exists right in front of an area of demand. So continuation patterns exist in areas of opposing demand to the downside, and to the upside is exactly the opposite. But that was a pocket of air. There's no resistance here. So when price breaks below your trend line, or breaks above your trend line, sorry. When price breaks above the trend, then look, ballistic movement in. That's exactly what you want to be seeing, because you have now profit potential. The origin of that move is your next target, where price, if it does reverse, it'll reverse there. But if you're in a downtrend, it'll break through them. But because you have a pocket of air, you're given from where you want to short potential profit to the downside. So right here, so if you short here, which is what you should be doing, because pocket of air, that you're going to have no resistance to the downside until you hit this area of demand. Again, price retouches a second time, and that's perfectly fine. Price does that all the time. 2 touches is good. ballistic movement in, and then you have ballistic movement out. This fall right here, and then a small pivot to the upside, and then a move down within that is a beautiful, I bet you anything, 5-second drop base, 5-minute drop base, drop supply zone. You could have just added positions right there. Gorgeous. And then price keeps on going because there's nothing in the way of that move. It's nothing but pockets of air to the upside, and this small pocket of air to the upside right here. So within here, there's nothing. And within demand and supply, also nothing. Hence why price has no problem falling through that area, and then you can reshort there, and then falls through this area, and then continues falling. Hence, also giving you a beautiful drop, base, drop, continuation pattern, which is what you should be seeing if you're going short. It's beautiful. Let's move to the next one. This same drop, base, drop, ballistic movement down. Well, what happens when you have your trend line right here? And again, I'll cover trend line soon. Once your downtrend is over, you want to cash out, take profit, sell high, buy low, maximize the amount that you can make. And once it breaks the trend line, you already know you're in a clear downtrend. And second, you just wait for price to move ballistically into an area that moved ballistically away from an area, such as this one. Ballistic movement into an area that had a ballistic movement out, leaving an area, which was right here. Drop, base, drop. Again, we covered this in the last video. Not only is this a fantastic thing that you should be seeing, or structure or pattern that you should be seeing when you're already in a short, but they also give you fantastic supply zones. You move ballistically in. This is a pocket of air, guys. And then you have ballistic movement back out. Why? Because it's a pocket of air. There's nothing stopping it. And you get a drop, base, drop, base, drop. No coincidence that this drop, base, drop happened in an area of opposing demand, because that is where they exist. And if you see that, let price run. It's a beautiful system. So pockets of air tell you where price is going to, if you're already in a position, if you have it, and let's just say you're going short and price is really tanking, then don't be afraid to cash out, because large moves are unsustainable. Hence GameStop. 800, 1,000%, and I said 48 hours, really high. I think it went up like over 1,000% in like 48 hours. It was crazy. A transaction video, it was actually like 5 days. Still insane, but that's unsustainable. That's unsustainable rate of growth. If you're already in it, that's fantastic. That's fantastic profit, but not if you're looking to get in. Wait for price to come back down, which is going to have to, because it's unsustainable. It's a pocket of air. It'll come back the other way. Let's go over another example. Right here, beautiful rally, base, rally. Fantastic demand zone. When price enters, you have ballistic movement in right there. It gave you a second touch. Again, like I've said, perfectly normal. But the origin of this move, supply doesn't exist until up until this area, way up here, the origin of a large move. And I cannot wait to get into supply and demand zones. But for now, one step at a time, let's cover the fundamentals first. This is crucial. Notice how much profit potential you have between your demand zone and supply. You now know that the space that price has to run is pretty large. That's profit potential. And that's just your target one. Then you have your next supply zone, which is the origin of this entire leg. That's target two. And then if it keeps on going, you just have a massive runner. Fantastic. Happy days. But that's what I mean by pockets of air tell you, one, you can get in because they're unsustainable. Second, if you're already short, then don't be afraid to cash out whenever you really get a big move, because price is eventually going to not be able to sustain that large move. Ballistic moves don't last forever. They never go to the moon. Well, they do, but definitely not often. So if you catch the counter position, then between demand and supply, that's easily 4% in a day. One day. Actually half a day. And that's just the target one. Ratios are a beautiful thing. And we'll be covering those soon. Let's not get into the weeds. So what you want to see whenever price is in a sustainable uptrend or a sustainable downtrend, a sustainable trend, is you want to actually see old school, slow and steady growth. The market, as I've said, is a living organism. So what do you want to be seeing? You want a human being or literally any living organism to breathe. Inhale, exhale, inhale, exhale. What happens if you inhale a lot? You eventually have to have a massive exhale. And if you do, then that's just price rallying big time and falling big time. But if you have slow and steady growth, slow and steady inhales and exhales, that's an uptrend. That's a sustainable trend. And let's just go over an uptrend right here. Notice how ballistic movement down is sustainable. But if you have an uptrend that has lots of tiny rallies, this rally-based rally, which holds this up. Why is my mouse not working today? Which holds this up, gives you another rally-based rally, which holds that up, which gives you all these little rally-based rally, like all this move, and then gives you a rally-based rally, which holds that up. Do you see how slow and steady growth, giving you levels, time in other words, to allow price to have a balance and then an imbalance of price? Those are the areas that when price comes back down, it's propped up and sustained. Not GameStop, big fast time money, but the way it comes up ballistically is the way it comes down ballistically. Ballistic movement is good if you're not afraid to take profit, because you're going to have to, because only sustainable trends to the upside and to the downside are sustainable, because they're given time to create zones that help that continuation move in that direction. So I hope this helped, guys. Next episode, I'm going to be talking about trends. Looking forward to it. We're finally getting to a point where there's enough of a base of knowledge that you can understand what I'm saying a bit more and hopefully a bit easier. I'm doing my absolute best. But I hope this helped, and I'm looking forward to seeing you guys on the next one. Take it easy.